Abhijit. So I will be starting exactly in the next 1 minute. So, good morning, everyone. Once again, my name is Vaqar Khan, and I welcome you all to yet another session of Pre-Bell with William O'Neill India. In this session, we'll take you through Nifty 50 chart placement, along with its probable opening, some key result discussion, along with some global and Indian news and events, and at the end, chart of the day for you. Without taking much time, let's start with Nifty 50 chart placement. So as you all know, Nifty has been on a declining trend since the last 5 days. If we talk about the last 5 sessions, the only way Nifty has gone is been downward. In the last 5 sessions, Nifty has added 3 distribution days, with 2 distribution day added in this week itself. If we talk about yesterday's session, Nifty started the day with a positive bias and remained range bound for most parts of the trading day. But in the last hour of the trading session, Nifty just declined sharply and breached its 50 DMA and 200 DMA along the way, and even a key support level of 17,000 to go with it. As we all know about William O'Neill's methodology, when the D days get piled up, you have to change the market status. So currently we are standing at distribution day count of 4. So we change the market status to uptrend under pressure. Going forward, if D days continues to pile up, we may have to change the market status to downtrend. Or on the flip side, if Nifty is able to take the recent high you mentioned as 18114, then we can change the status to back to confirmed uptrend. So let's talk about some key results that happened yesterday. So first was ACC. So ACC presented its Q1 CY22 results, which beat estimates. PAT declined by 29.6% YOY to 396.3 crores. Revenue grew by 3.1% to 4,426 crores. Margin contracted by 56 BPS to 14.3%, which we all know happened because of the rising fuel costs, because of the geopolitical tensions, global geopolitical tensions. But still, this 14.3% was slightly higher than consensus estimates of around 13.8%. So on the capacity expansion front, the Amita MTPA capacity is expected to be commissioned later this year in Q4 CY22, and grinding capacity of 1.6 MTPA is commissioned already in February. So the demand outlook given by the company is pretty stable, and they expected improvement in Q1 CY22 from the last quarter, which has happened, and going forward as well, they're expecting demand outlook to remain robust. On the LTIs front, the Q4 FY22 results was a miss on the estimates. The constant currency revenue growth was around 3.6% Q on Q. INR revenue was around 4%. EBIT margins contracted by around 60 BPS Q on Q to 17.3%, mainly because of attrition rate at 24% for Q4 against 12.3% if we compare to same quarter last year of Q4 FY21. So an attrition rate of 24% is pretty in line with what even the industry is facing. If we look at results from TCS and even from Infosys, TCS attrition was around 17 odd percent, and Infosys was in the range of 20-22%. So even LTI attrition rate is in that range itself, and the IT industry as a whole is facing issues with the attrition rate, which can easily be seen in the contracting EBIT margins as well. If talk about the TCV wins, there were 4 large TCV wins of 80 million in Q4 FY22. The results to be announced today will be Angel One, ICICI Securities, and Tata Elxsi. Now, let's talk about some other major news and events. So, IMF in its latest update cut India's GDP growth by 10 BPS in FY22 and 80 BPS in FY23 to 8.9% and 8.2% for respectively on account of weaker demand and drag from lower net exports. Similarly, global growth forecast is also slashed by 80 BPS in 2022 and 20 BPS in 2023. The telecom subscriber data was also released for February, where in Feb we saw 37.2 lakh mobile users were net loss. Airtel was the only subscriber base which gained around 15.9 lakh subscriber base, and Jio and we lost around 36.6 and 15.3 lakh subscribers. If you talk about the January data as well, Airtel is the only company that is able to gain subscribers. Airtel gained around 7.5 to 7.6 lakh subscribers in the January data set as well. Talking about our FIs and DIs net buying and selling, FI continued to remain net sellers as they have been for this year. Yesterday, FI sold around 5,872 crores of Indian equities, and on the DIs continue to remain buyers with around 3,981 crores of buying. We talk about crude oil. Crude oil hovered around 108 per barrel, USD/NR at around 76.5, and US 10-year Treasury yield is continuously climbing as it's nearly 3% at the moment, to be precise at 2.96%. Similar levels of US 10-year Treasury yield was seen last in 2018. If the US Fed or the FMC members continue to go with their hawkish comments, which is raising the interest US 10-year yields higher. We go about the US market's reaction yesterday, undeterred by how the yields are going. All the three indices, Dow Jones, S&P 500, and Nasdaq closed higher. Dow Jones closed higher by 1.5%, S&P by 1.6%, and Nasdaq by 2.2%. All the three indices remain in a strong momentum during the entire session yesterday. If we talk about how the Asian markets are trading, they're trading in the range of minus 0.3% to plus 0.5%, with Kospi and Hang Seng around minus 0.3% and Nikkei at around 0.5%. Now let's take us some cues from what the SGX Nifty is trying to tell us. SGX Nifty is indicating a positive opening. So earlier during the day, it was trading around 17,022 against Nifty's close of around 16,758 of yesterday. Now let's talk about the chart of the day. And the chart of the day for us is APL Apollo Tubes. So APL Apollo Tubes is into structural steel tubes and is the market leader in its segment, commanding around greater than 50% market share in segment. 90% of the revenue for the company is derived from real estate and infrastructure, and remaining from airports and warehouses. Given the latest pickup in your real estate demand in your metro cities and your tier 2, tier 3 cities as well, and the recent reiteration of the infra push by the government in the latest budget augurs well for the company. If you look at the last decade for the company, the capacities for the company has grown at a CAGR of 18% through your organic and your inorganic route as well. And the revenue has grown by 24% in the last decade, which has led to market share gains for the company. The company has been consistently adding value-added products as well. The value-added product share for the company in FY16 was around 40%, and it's around 62% for FY22, according to the latest Q4 FY22 operational update. If we talk about the latest Q4 FY22 operational update, the sales volume for the last quarter of the year grew by 27% YOY to 5.5 lakh tons. And for FY22 as a whole, it is around 1.76 MT, very close to their FY22 estimates of 1.8 MT. Talking about the capacity expansion at the Raipur plant, which is of 1.5 MT, is expected to be operational in H2 FY23 and partly operational of 0.4 MT in H1 FY22. Given a strong fundamental and earnings profile, we can see that EPS strength is already very high at 84. Talking about buyer demand, it's great at A, which can be seen as strong accumulation is happening on the right hand side of the cup base formation for the stock. The number of funds and the share held by funds is also increasing by around 17.4% and 5% respectively. The stock is trading well above its key moving averages and is forming a stage 2 cup base and is trading 7% to its pivot. Let's see how the stock behaves around the pivot and if it's able to provide a clean breakout or not. Thank you. And stay tuned to this space of Pre-Bell with William in India for your daily market updates.